Hey guys, everything new under the sun. I wanted to give you a bit of a market update here, and you may say, well, what happened today in the market? And I would say, pretty much nothing in terms of, anything exciting or massive dives or crashes or collapses. The Dow Jones was actually up almost 300 points today, and so was the S&P and the Nasdaq, and the Asian markets were down, 0.37, not a whole lot. And the European markets were all up in the green there, you can see. And oil's not doing too bad. It's at 46. It was down 0.06%. And gold was down, because everything's good in the world, and silver was down because you don't need precious metals when everything's good and everything's green. And I show you that because what happened yesterday, it was down 500 points or whatever it was, and then it bounced. And that's the same thing that happened Monday, last Monday. It went all the way down to just over 1,000 points down. And then the next day and the next day, over in the next 2 days, it kind of bounced up. They call that dead cat bounces. I say that because what we would expect with a financial collapse is not one single event. You didn't see that in 2001, really, although you saw big drops. You didn't see that in 2008, although you saw big one-day drops. We saw a big one-day drop last Monday, which was over 1,000 points. That was more than any time in the history of the Dow Jones. I think in 2008 it dropped 777 points or something. But this was the biggest drop in the Dow Jones history. But even with that, the whole collapse does not come all at once. I just want to show you a chart here. This is the Dow Jones Industrial Average for 2008, which I can't pull this up and show you. But anyways, this right here is October 2008 that you see in the bottom yellow section here. And but what you see ahead of it, this big long line of downward trend from 2007, as the markets were getting worse and worse and worse. And then again, this is U.S. And so they introduced TARP, and the vote failed in Congress. The TARP vote, which was quantitative easing, which was money printing, it failed, so the stock markets dropped there. This major drop isn't something obviously that occurs all the time. More likely what you're going to see is big ups and downs, and that's what we're seeing right now. Last week we saw the big down of 1,000 points. This week we saw on Tuesday, yesterday as of the time that I'm making this video, it will be 2 days ago maybe by the time you actually see this. You'll see big ups and downs. And Tuesday it went down 560 some odd points, and today we're back up at 300. What you see though is we go down a bunch and then we come up a bit. And then we go down a bunch more and then we come up a bit. We're never actually getting all that we lost. And over the year, the Dow Jones is actually lower to start. They've lost all their gains. And day over day, even though we seem to get back into the green somewhat, back out of the correction area, the 10% correction area, the overall trend is downward. And I'm no financial expert, and you know that, and I've said that. But I think it's just a sort of a heads up, a warning. We're not necessarily expecting to see one big crash and then the world blows up and your lights go out and your car runs out of fuel. You're going to see over days, weeks, and a number of months, you're going to see problems in the economy. People will start losing jobs, and then the ball will start rolling quicker and quicker down the hill until there is a point where there will be food lines like in Venezuela, and that sort of thing. And there will be food shortages, and there will be maybe 20% unemployment and a 40% decrease in the stock market. But you won't see that all in one day necessarily. So that's just a kind of a heads up. We're not necessarily expecting one massive crash and everything, like a nuclear weapon goes off and blows everything up. We're expecting to see a more slower downturn over a long, possibly a number of months, and things will get worse and worse, and then until there will be the bottom drop out, at some point. But like I say, it will have been happening over a number of months, so you should be well aware of it. It may or may not be too soon to get out of the market if you have money in the market, however, at that point. Because if you're expecting it to go back up, well, the overall trend is downward, so it will not go back up necessarily. Um, this also may mean you have less and less disposable income, and your bills are getting harder and harder to pay because maybe a spouse loses a job. So various things like that. Um, we're not going to see a one-day bottom falls out necessarily. We could, but it's not likely. It's not how 1929 happened exactly. It's not how 2008 happened exactly. You're going to see the overall trend downward, and it's going to get harder and harder. And you will see food lines, but like I say, it won't be necessarily a huge shock. However, when people do realize that it's not going to go back up and that we are going into a depression-like area or zone, then there will be less and less resources for everybody as companies go out of business and they stop moving food. Less and less food is being stocked to the store shelves, and so your options are limited more and more and more. There's less gas at the pumps, and all this sort of thing, and less people to pay for it. So just a warn to say, this is not going to happen all at one time, and I do expect to see this play out over a number of weeks, and I think we saw that last week with the big 1,000-point drop, and this week with a 500-point drop. So it'll be interesting to see what happens next week, and we'll see if the situation continues. But the stock market will go up and down huge amounts before before the bottom falls out in a larger sort of a fashion.